evidences. What will help is, okay, the narration in the bank statement is tight. Like maybe if before the man, even 1,000 naira as maybe for fuel, the man is putting it in his narration, you can easily gain access to it. So I just want to build us up to where, okay, they don't have complete records, like they are not keeping their books, they are not doing. So you can easily get information from the bank statement and it flows into the financial statement. But we all know that as an accountant, there's a right way to do this thing. It's because this person is keeping incomplete record. That's why we are going through the bank statement, which we are not supposed to go to on a normal day. It's because they don't have complete records or because of the challenges of small and medium scale enterprise. So we all know that there are 4 or 5 stages for like it goes from the source document. So the stages of from when the transactions will go from the source document to the financial statement. So we know it, we have to go through the source document. From the source document, those are like the receipts, the invoices, etc., the purchase order and the likes. So we have to enter it through the journal, either through an accounting software or through any software they are using, any business software they are using, basically. So from the journal, it goes to the general ledger. Then from the general ledger, it goes to the trial balance. Then from the trial balance, we now spool into our financial statements. Sorry, please, I'm trying to. I don't know. I think I'll just remove the person. Okay. Yeah. So, as I was saying, so we go from source documents to journal, from journal to general ledger, from general ledger to trial balance, and from our trial balance, the financial statement. So our 3 financial statements, as we all know, is the statement of profit or loss. Then also we have our statement of financial position and we have our statement of cash flow. So for the purpose of today's class, I'll soon be going into the practical session, but I'd like to take like a 15 minutes question or 10 minutes on what I've asked for so far, like what I've talked on so far. So if you are meeting a client for the first time, the systems to put in place, the things to do and all. So I already talked about the flow of transaction from source document to trial balance, then how to gather data. Yes, okay, I have not talked about this. So how to gather data for preparing the financial statement. Like I said, you need invoices, you need receipts, you need all the source documents. And you must ensure that all the outflows that are out from the bank tallies with the evidences. So you're not just posting transactions into your balance or your general ledger without an evidence of them. Sorry, let me mute this person. Okay, I'm just removing the word again. Okay, thank you. So, as I was saying, so how to gather this data? It will be a cumbersome one, because imagine if in 6 months I've not kept my books and I don't know where I kept the invoices. Now imagine a company that has not kept their books for 3 to 5 years, right? So I want to take us into the practical aspect, but before we go on, I would like to take like a 10-minute question on this before I go into the practical aspect of analyzing the bank statements. So I don't know if there's anybody that have a question. If you have a question, please kindly raise up your hand, then I would call your name to speak. Thank you. Okay, I think so I'll take it from the first name I'm seeing here. So Umo, let me stop sharing my screen for now. Okay, I don't want to. Okay, Okoti, Mr. Okoti or Mrs. Okoti, please can you go on? Can you ask your question? Can you ask your question? Yeah.
Can you hear me?
Yes, I can, sir.
Yes, thank you so far. My question is very straight and direct. In a situation where there is no narrative in the bank statement, what do you do?
Wow. I think I'll throw that question back to you. Can the business owner remember what he did, like what that transaction was for? See, it's really hard relating to all these small and medium scale business. it will be very tough, because if the owner of the business didn't put narration, I cannot even remember, how will you as a consultant or as an outsourced accountant, how will you know what they did? You're not there when the transaction happened, except if they have like an in-house accountant that is keeping the records, then you can go through that records they've been keeping. So I really don't, we can't just add things into the books for adding sake. So I hope I've answered that question. That's a tough one.
Yeah, thank you.
All right, thank you, sir. Mr. Marcus, you're next. Wow, yes, I like this question. Mr. Marcus, or should I call another person? If Mr. Julius is available, we can ask his question, or...
Well, I'm on the road, so I just have to type the question. Now the question I asked.
Okay, you're the one that typed.
Quite noisy. Yes. So, but the question is, for organizations that uses multiple banks, how can you be able to get? Yes.
Okay, let me mute. Okay, so for an organization that uses multiple banks, so what you do is you advise such company to centralize their transactions. So in my company too, we use over 50 bank accounts, but we have a centralized bank for for payments. So anything that relates to outflow, we do it from a central bank. You don't just use different bank and give your accountant headache. So I think over time we have to now streamline those 50 bank accounts to now 25. So the remaining 24 are for inflow, then just one is for outflow. So you have to advise them so that they don't give you headache. So when you're done doing bank reconciliation for one bank, you're also going to the next bank. You just tell them to centralize. You advise them to centralize their transactions in one bank, though they may not be able to centralize all their inflows into one bank, especially for like construction companies that deal with different clients. So they might have different accounts for different clients. That's fine. But for their payment side, their outflow, they should just centralize it to one place. So if they want to send money to a vendor, a contractor, they should transfer money from their other sub accounts to like a main account for payments. So I hope that answers your question, Mr. Julius.
Can you hear me now?
Yes, we can hear you, Mr. Marcus.
Yeah, good afternoon. Yeah, what I want to ask is this: if a company does not share, maybe they are not, all the transaction is not passing through the bank, they are dealing with cash payment, so they want, but let me say cash transaction generally, and most of their payment is based on cash. Let me say almost 80% of their transaction is on cash payment. How do you do that? Because we don't have bank statement that is really entails the details of their transaction. And again, the owner of the business always takes some money, withdraw some money, or take some money for our own personal use. And he said that he's using it for the company because most of the time the cash is with him or with her. So how do you handle that situation then?
So in that situation, you would let that kind of person have like a WhatsApp group with you, as if they don't have an in-house accountant now. So for every money he or she is spending, the person is sending it to your WhatsApp that, oh, I just spent 80K on fuel. I just spent 50K on decoration. So the person is real time. And okay, you know that as of yesterday, we closed with 200K cash at hand. The next day, the money is now remaining 20K. So what happened to 180K between yesterday and today? So you just try to encourage the person that as she's spending the cash, you just ask, okay, what's the position of cash now? If you really want to track this thing, you have to be very intentional about it. Or another situation will be where they have an in-house cash officer, maybe like what's the word now? Like people that cashier, yes. So if they have an in-house cashier, the cashier is recording everything. So now we have to now resort to paper if they are not using software. Or so we can also look for software solutions, because I know there are like some petty cash solutions where you can enter daily transactions on software that you don't have to pay for. Yes, so okay, somebody is saying something. Okay, we are still getting there, Mr. Osaro. We are still getting there. My question is, how do you analyze? we'll soon get to the practical aspect. So I just want people to ask their questions before we flow into the practical aspect. Then, because I'll attend to this question very soon. I think, does that answer your question, Mr. Marcus? Mr. Marcus, does that answer your question? So we can move on to this last one. Why?
You have answered it. You have answered it. All right, the problem is that company I'm talking about is a very big private school. So they don't really, they're asking about 5 years financial statement now, that they want to know they spend their money, they want to know how much their income, and now ask them question that, okay, where are the list of what you have been collecting, the school fees and everything. Yeah. So the name of the student that have been in the school for the past 5 years, can we get them? And how much are they paying? How much is your debt? All those kind of things, but they could not provide anything. They just say they are getting cash, they are buying this, they are buying that. The accountants who are not able to give proper records, as you said. So they just say, maybe I give them 20,000 and they withdraw 50,000. They are withdrawing money from the bank. When they want to spend it, no other thing. They just go and spend it. No receipts, no source documents.
No source documents.
So that's why it was so difficult for us to prepare that account. That's why I even said, let me join this training. Maybe I can still gain some knowledge to help me to prepare this thing for
Yes, I get that. So a company using cash basis should ensure that they are recording. So if I have like cash of like 500K at hand and I've spent it to like 20K, I've been noting it down. Even if I don't like write it in paper and biro, I can have a note on my phone. Like everybody is using Android basically. So I can have a note on my phone. You can advise her to, like, as she's spending the money, she has a note where she's writing it, or she's retiring the money at the end of the day. Or the best thing is just to like employ a cashier that, okay, I need this money. Or cashier will ask you that, okay, what do you want to use this for? Okay, it's for uniform. Want to pay vendor for uniform? They will write it down. Want to buy books? They will give the cashier the money and be ensuring that every day she's recording it. Maybe it's just to like employ a secondary school person so that can also be in charge of this thing. It's not something very tough. They might say incur more expenses.
Okay. So thank you very much.
That kind of thing.
Let's continue flowing. Yeah.
Right, so,
thank you very much.
You're welcome, sir. The next person raising their hands up. Okay. I think let me just go to the chat room and answer the questions there. Then we move on to the practical aspects. So the next one, Mr. Julius was asking that we need to work for a fintech. So I've actually prepared I've done a financial statement for a fintech, and there are 2 scenarios we'll be using today. Today we'll be using a normal SME, and the report I'll be showing to is for a fintech. So the fintech is using USD. So you need to understand translation. You need to understand IS-21. That's if I'm not wrong, my ACA in the mud. I'm sure it's IS-21. God, please, let me see. Yes, it's IS-21. My ACA is not modern. So IS-21 is showing the effect of foreign transactions, like the effect of effect of changes in foreign exchange. So you need to know how much are you recording as at the initiation of the transaction. You have foreign exchange gain and loss. I remember then when I prepared the account, we had foreign exchange gain and loss. So you use CBN rates to translate all the. So if you are using opening, are you using opening rate as at first of the month or closing rate? So you really need to understand IS-21 if you are working with a fintech that has a USD account or a company that has a USD account, because there will definitely be foreign exchange gain or loss. Then so far, seeing foreign exchange loss, so because our dollar is always increasing, and us we are at the buying side, so we are always having foreign exchange gain, and these gains are taxable by. When our auditors come, they always charge us tax on these gains too as well. So I'll just take the last question before we move to Excel proper. So aside online spreadsheets, okay, statement of changes in equity is also part of financial statements. Yes, so it's just the 3 major ones we know, but when you have a full-fledged management report, you add your statement of changes in equity there. You have to put your notes to your accounts and everything like that will be very detailed compared to just this summary you are doing. Then aside on Excel online spreadsheet, MS Excel, what other tools or online resource can be used to analyze bank statement and prepare financial statement for SME? So to the best of my knowledge, the accounting softwares, but it's just that I think Nigerian banks, because there's something some high-end accounting software do. You can pull in your bank statement into it and it will analyze it for you automatically. I think Zero does it. I'll confirm. I think Zero does it. I'm sure Zero accounting software. I would confirm, but I think they stopped it too because bank issue and all. So they stopped linking our banks to accounting software. I don't know why they did it, but I think it was a CBN regulation. So I think for now, please okay. Yes, so we can go on. Then I'll be putting myself off so that I can share my screen. Thank you for your time so far. Share my entire screen. Okay. So I'll be going to the for the training. So we'll be using ABC as a, what's the word now? As a prototype. Then where is that financial? Okay. So I was able to get this ABC Limited now uses 2 accounts. Let me open that. So we started this. We are in the next part of the training where we are analyzing the bank statements. So ABC uses 2.
Sorry to cut in.
Yeah.
Sorry to come in. It means some people are waiting to join the session.
I am not seeing anybody in the waiting room. So have they tried to join?
People are saying it in the group that they're not able to join.
Maybe they should try again because I've admitted everybody. I'm not seeing anybody in the waiting room. This is my screen, so there's nobody in the waiting room. Maybe it's their network. I can't. Let me try to log into my WhatsApp. I'll have to stop sharing. There's nobody in the waiting room except if they will have to rejoin. Fortunate.
Yeah, hello, I'm with you.
Is there any? I can't see anybody in the waiting room, so I don't.
I think we can
proceed
know. If there's no one in the waiting room.
Yes. Please, can you attend to those people on the group chat? I'm not seeing anybody yet. I'm not seeing anybody on the waiting room.
Okay.
Thank you. Okay, so let me share my screen. So now, when you are requesting for bank statements, some banks send it in PDF format. Okay, yes. So this one now, we're able to get it. I was able to get it in, what's it called? I was able to get it in Excel format. So you can also ask them for Excel format. So this is how it came. This is how the bank statement came in Excel format. So now this thing too, it's not only using it for a business, you can also use it for yourself. So now I'm copying this page and putting it on a new page. Paste 1, 2, 3. Okay, let me just paste 1, 2, 3. So now I just want to delete some information I don't need. This delete. Okay, let me turn off my WhatsApp. Okay. Okay, yeah, that's fine. So now transaction date. So I want to make my you can see that this bank statement is from 2021 value date. So I don't need my value date. I just need my transaction date. Then this is the description. So I don't also need this reference number. I can delete it. So this is what I'll do, right? I'll have to sort my withdrawals and lodgement. I'll have to use control sort and filter, sorry. So I'm sorting all this. I don't know where my mouse is sorting up. Okay, this is a small one. It's something we can do in the next 5 minutes. So I want to sort them into largest. I want to sort withdrawals on one side and I want to sort lodgement on one side. So I'll start with my withdrawals first. That's column C. I hope we all know how to use sort and filter. I just clicked on this place, then it brought this out. Yeah. So then my withdrawals are already sorted. Then I also come here again. Then I sort my outflow too as well. Custom sorts column. I'm sorting it from largest to smallest for a particular reason, because of bank charges. Bank charges are also like 50 naira and all. So I'm sorting this one too from smallest to largest. Then okay. Do I want calligraphy? I want camera. Okay. But then I don't need this balance. So this was the balance as at 31st of December. So I'll come here. This is my lodgement. I can assume that I want to put lodgement down. I'll just come here. What is this now? Okay, Control X. Then Control V. Okay, we already have opening balance and we have closing balance. So I will use these figures later. Okay. Okay. So this is a prototype bank statement that I was able to spool out. ABC was called ABC Limited. So now I want to analyze this. So this one now should be a bank charge transfer from that. So this one's a bank charges. So I'll just come here, details for narration, amount. So I come here. This one is opening balance. Opening balance. Then this should be bank charges. So if, as you are going through the bank statement and you are seeing things you don't understand, it's best to ask the person that is in charge of payment. This one too is bank charges, and this one too is bank charges. This one is airtime, so I can put airtime here. Airtime. This one too is bank charges, monthly charges. Then this one is transfer. This is interbank transfer. So I'm sure the person was transferring from a sub account to a main account. So this is interbank. Then this is, so this Erioka for the purpose of this class is not the owner of this account. So I just use him as a prototype that is the, what's the word now? I'll call him the sole proprietor of the business of ABC Limited. So this is drawings. Sometimes some business owners might decide to, let me check, I'm still recording. Some business owners might decide to use the drawings as their salary. So we can call it CEO salary. So some of them will say any money they are withdrawing from the company. So when accountants start questioning them, we can use it as CEO salary. Then this is also interbank. So ABC is transfer from ABC Limited to another ABC Limited. That means it's interbank. Then we have the next one. This is also interbank. Then this two. This one too is interbank. Then refuse collection for 1 month. So you can say this is waste expense. Waste. Then fuel and champagne. So we can call this office entertainment. Office entertainment or business entertainment. Anyone. Okay. I think business entertainment would be better. Business entertainment. Then these two would be interbank. Then this two is okay. This, so now once you see transactions like this in the bank statement and you're not the one that initiated the as you're not the in-house accountant that initiated this transaction, the best thing would be to call or note this kind of payment down, like let me ask my I'll have to ask the owner of the business or whoever initiated this payment that what is this payment for. So because I've done this account before and I know what this payment is for, I'll just say this is a bill by Delis. And the business, let's say the business is into nails, like they're into hospitality or let me call it a beauty parlor. Yes, I can call it a beauty parlor. So anything that has to do with facials, nails, body scents, body perfumes, and all those things, then this is not relating to anything they are doing. So I can also call it business entertainment. Maybe they bought food for one of their friends. Then we have petty cash. So I also put petty cash here. Petty cash for their Lekki store, petty cash for Lekki store. I think somebody is trying to join. Let me add the person. Okay. So petty cash for Lekki store. Then this one is still interbank as well. So this is just, I'm starting from smallest to largest. So if we see this now, this is POS settlement. So now, as accountants, we should understand that for, what's the word? So for settlement, you know, sometimes some of our, or most of our clients use this POS, this point of sale solution. So you should understand that there are different, some people use it as goods and services. So it depends on the bank or the POS solution. We have InterSwitch and we have, what's the second one? InterSwitch and is it Universal or something? I don't know what the second one is now. For people that do POS reconciliations, know it. So we have InterSwitch and the other one is Unified or something, Unified POS. People that are doing POS can also help me out. It's been
Unified, yes, you are right. Unified POS. Unified POS.
Yes, so we have UPSL, yeah, UPSL, and we have InterSwitch. So this one now is a settlement. I'm sure it's a test transaction. So you can just put inflow into this place. Then the next one too, InterSwitch, goods and services, inflow. This one, we can assume this is a receivables or a collections account. So they use it to collect transactions from. So if you can see pedicures, you can see nails and everything. So I'll just put this as revenue. This one, settlement. Then this one, revenue or inflow, anyone. When we still do some reconciliations with this, so you can either target settlement or inflow. So if I go through it, I'm not seeing anything unusual. Most of these are from customers, so I can just come down here and tag this as everything revenue or inflow. So yeah, this is where the analysis now starts. So I know, let me freeze view, freeze print, freeze stopper. Okay. So I'm putting this in bold. So I can close this up. Then we have amounts. Then we have bank, opening balance. So one of the downside of using Excel is you have a lot of tabs open and you have to keep tabs of everything. We have airtime and airtime. We have interbank. Then we have waste. We have what's going on? Waste. We have business payments. Then we have petty cash. And we have. So we'll still do a more complex one. I just want to use this one as. Then we have. Let me use revenue or inflow. We have business revenue or inflow. So then this is withdrawals, opening balances. So I'll come here, my opening balance is 5,000. So opening balance is 5,000. So there's an Excel formula that I'll still have to work on for this, but let's still make use of this bank.
Forgot to put the drawing, CEO salary.
Oh, okay, thank you. Thank you so much. CEO salary. So bank charges and airtime. Then so we want to do like a debit and credit for this kind of thing now. So for this, we are supposed, for all our withdrawals, it's supposed to be in minus. Because for you to use Excel, you must understand your double entry tool must be very good, so I will not make mistakes. Now this opening balance is a credit, is a, what's it called? It's not supposed to be in debit. So these ones will be in, down. So all our outflows will be in debit, in minus, then our inflows will be positive. This will help us when we are calculating to see if all the analysis we did here tallies. So another thing you can do too is to sort all this narration into types. So no, not this. All the outflows. So I'm stopping here. Custom sorts. Custom sorts. That's F, A to Z. So I want to put everything together in the same place, so it will help me with my analysis. Then business entertainment is here, is equals to minus this, is equals to minus this. Then CEO salary is equals to minus this. Okay, then interbank is equals to minus this. Okay. Then petty cash is equals to minus this. Waste is equals to minus this. Okay, then revenue is equals to this. Then I drag it down. Revenue and inflow. Okay. Then I have my closing balance here. So then totals. This is bold. So this is equals to sum this into this four. Okay. Alright, then I drag this too as well. So it stops here. So now if I want to check that everything I've been doing is correct, my closing balance.
Please. Sorry.
Yes.
Hello, sorry, please. Okay.
Yes, I can hear you.
I want to ask a question. I want to ask a question. Yeah. For instance, where your client has multiple bank accounts and you are working on their financial statement, take for instance, for like 1-2 years or thereabout, are you going to do all of this analysis for each of those, bank statements, looking at the fact that in each of the bank statements, they carry out similar transactions, so perhaps where they have, money in it. So are you going to do all of this analysis for each of those bank, statements?
Yes, basically, because you're using Excel. So what you can do to make your work faster is to accumulate. So like, how many years did you mention? 3 years or
how many years? Yeah, 2 or 3 years. 2 or 3 years.
So like, so what you can just do over,
and you have like 10 or 15 banks.
Yes. So what you do is you would, because some of them might be inflow and outflows, so you have to do this for them, because since they don't want to use an accounting, because if you are even using an accounting software like I use Sage and we have 25 bank accounts, we spool in all those 25 bank accounts into Sage, like every transactions there, so everything goes into it. So you just, what you can do is, instead of doing it monthly, that will be huge, you can just do for, so let's say they didn't do from 2020 to 2022, so you spool in, you get your bank statement from 2020, January 2020 to December 2020. The next one, so you can prepare 2020 financials. The next one too, you get January 2021 to December 2021. The next one too, January to December 20. So you are working on one bank statement for a particular year. You're not doing it month on month, but you can now have over like 100. So now you know that it's 15 bank statements you're working, and you can also advise your client. Most of them is ignorance. What are you using 15 bank statements to do? basically. So if maybe it depends on the nature of their business. I know some business really needs it, like some HR consulting companies. I know they have like accounts for different clients, like bank accounts, they create it. So in that case, that means you have to employ more accountants. And you too, when you are billing them, maybe you're an outsourced accountant and you've seen the work. So that before you even start billing them, see the nature of the work, see how voluminous the work is. So you not bill them like 50K and you now find out that the job is like 200K job. See now 15 accounts, where will you start from? So that you can even outsource it and teach somebody else to do it. So you're just doing the compilation. You're not doing all this back and forth with all this one by one. Do you understand?
Okay, I have the question.
Yeah, thank you.
Okay. Yes,
I have a question for.
Okay.
I heard you made mention of Sage 50, like pulling this into the Sage 50. How do you do that for clients that have like various accounts, bank accounts, and you want to spool this and put into the Sage 50? Do you just go directly, or you have to impute one-on-one?
No, you don't need to. It depends on the settings. So I don't need to input one-on-one. So there's a formula. Sage 50 has a format, so you can spool in all of the outflows. You can even spool in inflows once you understand your debit and credit. So if I were to work on Sage 50, this is what I will do. So I'll just take this, all my withdrawals first. I'll first copy it out. So there's like a format. I think you are very familiar with Sage 50. You know it has like a format, your dates,
Madam, please kindly admit people. They are complaining. Please kindly admit people. They are complaining on the book, please.
Okay, it's only 2 people. I've admitted them already. Okay, so who else? Please tell them. Okay, so I'll take this and move here. You know, Sage has like a formula. I think in front of this too. I'll have to put my narration.
Okay, you still do that in Sage 50?
Yes, you still put your narration. So it depends on how it's formatted. Like I want Sage 50, I'll have to put the narration in front. So I will now put the general ledger code. So I think it has like, you do like my own now, it will have something like this, NNN. There's a format for it, so you can pull it out from Sage. No, it's not supposed to get down here. So this one now, then maybe this is the general ledger code. I can have like ACC/03/2000. So you know that kind of format basically. So you just use the format, then you spool it at once, then use a journal batch to do it on Sage. You don't need to be entering bank charges 14 naira one. You enter the second one, you can. So that's how it works.
I think that's something I have to learn on my own.
Hello.
Yes.
Hello.
Yes, I can hear.
Hello.
Okay, you're welcome.
Hello. I think instead of that, we can just transfer them to journal entry and enter into
general ledger.
Yes.
Yes, that's the same thing I'm doing. I'm not saying she should enter it one by one. You can batch it up and enter it at once. All your transactions.
Hello.
Once.
Hello.
Yes, I'm listening.
Hello. Yes. Please have a question. Is it only Sage that allows this batch posting or every other any other? Is there any other QuickBook? ERP accounting ERPs that have?
To the best of my knowledge, and I use 50. I don't know if somebody else can answer on the call, but
please, people should just focus on Zoho. Zoho will do better for all these things. Zoho is very easy to use.
What's going on? What's the issue? Please, what's the issue?
Hello? I just want to contribute to what Tosin said now.
Yes.
In my organization, we use Sage 300.
Okay.
What I always do is that if I want to do any payment like that, we always have a batch list. Like if you want to make a payment for about, if I make payment for about 20 clients, 20 vendors rather. So each on that stage, there's a place whereby you will input each transactions, the vendor name, descriptions, the bank code, and then the amount. So we now upload everything. There's a way we have to generate the batch list for a single batch list for all the transactions. So immediately we generate that, we now wait it out. That same batch, yes, exactly. That same batch will now be uploaded on Sage.
Yes, that's the way it works. I think Sage has that feature, but I'm not sure if QuickBook does. I'm not sure.
I've never used QuickBook, but Sage 300 does that.
Sorry, okay. Yeah, page 52 does. Yes, I can hear you.
Sorry, please,
can we just go ahead? The question will come, please. Hello. Can we just go?
Time is of essence.
Please, let's continue, please. I'll try to wrap up by 5:30. Sorry. I'll try to wrap up by 6:30 so we can take more questions. The reason is for everybody to get clarity beyond the training too. It's for everybody to get clarity. So by 5:30, I will try to wrap up and take us in the next stage. So now let me just then this. Okay.
Can you just explain that sum if that you?
I didn't use sum if here, so I will do that for the next bank that I want to use. I didn't use sum if. I use normal sum. I didn't use sum if.
Okay, sum.
Okay. Yes, normal sum. Yes.
Okay.
Yes. Okay. So then this now I just do is equals to this will show me if what I'm doing is correct since morning, then to the end of wherever this stops. So my closing balance, what did I have as my closing balance? Normally this is supposed to give me 0. So if I come here, so now you know we put minus on our debit, and for our credit we put it in plus. Okay. Okay. So now our closing balance is 40. No, this is not our closing balance. Our closing balance is 73,000 according to this. So if I do, we know that to get closing balance is equals to opening balance plus anything that went out plus or minus anything that went out. Then let me just do something like opening balance, withdrawals. So I also make it here to get my total withdrawal. Yeah. So opening, let me just copy this. Control C, Control V. So normally this is equals to this, lodgement plus like all the inflows that came in plus opening balance, this 5,000 minus this minus withdrawals should give me my closing balance. So you see that I start with this. So this minus this. This is the closing balance we had. This one here is the closing balance we had from the bank. So this my closing balance is supposed to tally. So I'm supposed to have 0 here. So let's see what's wrong with this formula. So what's my closing balance? Okay. So I'll now come here and add closing balance. Closing balance. So that's equals to this one that I calculated here. Okay. So this is my closing balance supposed to be in. There's something with this one. There's something we've not captured. What could be? Okay. There's something wrong somewhere. Waste 20,000. Petty cash 40,000. Okay. Because normally if we do the addition of everything here, it's supposed to be 0. Let me see. So is equals to this.
Please check the biz entertainment. I think that's where the problem is. You use 5,000 instead of 20.
For the business entertainment.
Yes.
Oh yes. Okay. Thank you. Oh wow, I've seen the difference. Okay. Yes, is equals to. Thank you. Then this. So that means this interbank. So this is drawing. So it's the CO salary that is wrong. Thank you. So that this example is not the best way to work, but if this is what your client has provided you with, you have no option than to just do that. Okay, yeah. So I've seen where the issue is. 2.5. We still have 2.5 for bank charges here. Minus. this, and business entertainment is on this minus. Okay, I think it should balance now. Then join CEO salary. Yeah. Petty cash. Petty cash. Petty cash is 40,000. Then this is 20,000. Okay. Let me see what we're having here now. Yeah. So if I put my closing balance here, so it will be closing balance will be minus this. So yeah. So I'll explain the reason why we're using minus here. So if you see this, when we're doing this computation, we did opening balance. Let me do it again. Thank you. I think somebody is trying to join. Okay, person has gone. So is equals to opening balance plus all the total lodgements, then minus withdrawals should give us our closing balance figure. So one of the downside with using Excel is if you don't understand the basis with which you used to do this. So you know minus is supposed to be for debits, but because this is the bank, you know, now how will I explain this? Whatever is on the credit side in bank, yes, okay, I don't want to confuse this. Let me do debit credits. So this withdrawals here is debit in bank, then credit. So we know that when bank gives us money, they will say it's credit. But when we want to record it in, so let me not confuse this thing. So we know that when our expenses, we debit expenses, right? We debit expenses and we credit bank. But in bank, it will be showing on the debit side. But in our record, it will be showing on the credit side inside the bank ledger. I don't know if you understand what I'm saying. So let me start again. So normally expenses are supposed to be debited, they clip, debit all assets and expenses, right? But in the bank ledger, so when we have our bank ledger, these expenses will be showing on the credit side. Because if you want to record, like for instance, if you want to record this airtime, it will be debit airtime and credit bank with this 2,000. But in the bank, it's showing on the debit side. So we really need to understand. So some bank statements will give you this debit and credit thing. So you will not post it the way it is like this. So I'm not talking about you moving into accounting software. You won't post it like this. So what you do is you just need to understand the basis of every transaction. So this opening balance now, if we are migrating, for instance, now the client now wants to migrate from what we've done here to their software. This opening balance in bank is showing as a credit inside the bank statement, but accounting, bank has a debit balance. So bank is a debit entry. I don't know if you understand what I'm saying. I think accountants in the house should understand. But here it will be showing as a credit inside the bank statement. But in accounting, we debit bank with any extra that is in bank. So when our bank is showing negative, you know, it will be showing on the debit side here in our account statement or in our bank statement. But in the ledger, it will be showing on the credit side. That's minus. So let's say we add minus in this opening balance now. It will be showing in red and it will be on the credit side here. So instead of this one being, it will be on the debit side in bank. Is the positive side that is on the credit side for bank and is the negative side that is on the debit side. But in our bank job, the outflow is on the credit side. Then maybe I should just do it here. So debit, credit, bank, then accounts. So what is debit here will be credit here in accounts. Then what is credit here will be debit here in the bank ledger. This is bank ledger. So
hello.
I don't know if you understand. Yes,
yeah,
I'm listening.
In a situation whereby the accountant is preparing bank reconciliation on a monthly basis, do we still need to go into all this extra issue Because I can see that
No,
it's more or less a bank replacement can solve for this problem. Now, all this debit and credit.
Yes, so where are they pulling the bank reconciliation from? Where are they pulling the bank reconciliation
it's collecting
from?
Bank statement on monthly basis. And it's doing.
So where is he entering those things in? Where is he entering it in? That's what I'm asking.
It's entering that. It's just preparing cash book on its own, just to make sure that it's doing something for the.
And in the cash book too, we have like his expense column now, like.
That's what I'm saying. It's doing bank reconciliation to make sure that all what he has in the bank statement reflects in the cash book.
Okay, yeah, so, I think I understand your question. So you can go through that route. But the reason why I'm using this format is because I'm taking this thing somewhere. So I want to open how the financial statement is now on Excel. So this is ABC Financial. Let me use the date that is on this as at 30th of October. So I want to run us through so this file will be shared with everybody. It will be sent to your mail at the end of the class, so we can also work on it. So if you really understand your financials very well, you would. So now, this is our SOPL. All these things, we are not just inputting this figure. If you click on it now, you see that they are linked from somewhere. If you click on all these figures, they are linked from somewhere. So if you do your things very well, they will tally, they will jive. Now, this report, somebody was saying fintech, right? So you know when a company is starting business, they don't really have any revenue. So if you see my SOPL now, I don't have revenue, but they are incurring expenses, they are paying salaries, they are doing general administrative expense. So if you really understand and your client or your company does not want to spend money on Excel, if you understand the way this thing works properly, you'll be able to spool in anything from where you are. So what I'm trying to do here now, one is that if I scatter anything here, everything will not jive. So I have to do a new copy for this. Save as. Let me use. Save. Okay, so I can now do anything I want to do here. So.
Oh, excuse me, please. Can I say something, please?
Yeah.
Please, if anyone has a question, they should raise up their hand. They should not be interrupting.
Sorry, apologies.
They're not the only one on this platform.
Sorry.
They should raise up their hand.
Okay, somebody is saying, yes, you can chat us up concerning the Sage 50 later. We can put you through. Then the interbank, what does the interbank represent? So in this place now, this interbank, right, where is that thing? You know, like when you send money from a main account to a sub account, we do it now. Like maybe I'm using GT and I'm using maybe, let me say, Access Bank, then I'm transferring money from Access Bank to. So this account is actually. Yes, it's a contra entry. It does not affect anything because this outflow that went here is an inflow in the next bank, so it does not really have any effect when we are consolidating the account. Do we understand? So sorry for the interruptions. I really apologize for that. Please, let's wait till the end of the class before we ask our question. So I want to run us through this. This is what we'll be focusing on in the next class. Like we'll be doing this in depth. So now we start from the edge to the bottom. So if we can see here, there's no revenue. There's supposed to be like a revenue sheet, but because they've not been carrying out any revenue, they just started. So now, if you even see in their bank statement, they should start with 0. I'm sure there's one that starts with 0. Okay, I'm coming. Okay, yes, we have our revenue sheet here. So this one now, we will need to have, is flowing from somewhere. Where is it coming from? This cost of sales too is the summary, is flowing from somewhere. Like all these things, if you see, like we have our asset register too. What are the assets they bought? So this thing didn't just happen. So I was able to pull this thing out from their bank statements because they didn't have invoice, they didn't have, so all the things they were doing, they were just doing from their bank statement. But you can also go and do asset verification. So I'm starting from things you can easily see in the bank because all these things, this was the narration they used in the bank. So they used 13 diffusers. They used what is it called? So this code too, you can do a code by yourself. So this is like an asset register, or this is an asset register. So this is the way they use it in their bank narration when I was pulling their bank statement out. So they have free. This was just all the expenses they were incurring when they started. So they registered the business and they started in May. This is another company now, different from what I'm doing. but I just want to show us how those things come. So if we see their bank now, so this is the narration. So I'll need to close this up for confidentiality's sake. So now I was able, this is all the transactions that happened in the bank here. I can't open it out because of confidential. But when I asked for explanations, this was what they were telling me. Okay, this one is inward transfer, this one is barricade, this is okay, this one is even for September. Let me look for the one for, I'm looking for the one for May. May is when they started. You see that the accounts be very scanty. So now if you come to this, their I'm coming. Okay. So if you see that their opening balance now,
so we can see clearly. Please, I'm sorry for interrupting.
You can zoom it from your end. You can pin the post and zoom it.
Okay.
Yes, please. Thank you. So I want to run us through how. So here, this is what I was supposed to. Yeah. So this is April. They started with 55 in their account. So normally they're supposed to have 0. This is the account statement I got for April. So normally they're supposed to have 0 in their account, but the business owner converted his own personal account to a business account. So this 55 was what was in his account as that. So if you want to start a business from scratch, the balance is supposed to be 0. It's 0 that is supposed to be here, but because the man converted his account to business account, it had 55 in his own account as at then. That's why this 55 is here as the opening balance, because a new business that is just starting should have nothing in their account. Where they see the money, then these are inwards. These ones are, this is the capital they used to start. So the two partners, I can't just put the narration here. So the two partners, right, one put 3.5, the other put 1.5, and also this is what they used to start. Then if I take you to my equity sheets, if I come here, let me okay, so this is that 5 million. So I want to take you back to how I got this 5 million. Sorry. Okay. I should put this. Oh, okay. Yes, so I did control and brackets close or something. So this is where I got my equity from. This is the money they used to start. This is the investors funding, their own money themselves, what they used to start up, their paid up capital. That's what I got in April when they started, right? Then in May, because they didn't do anything, they only collected money in April. And if you see, it was already close to the end of April. They collected the money April 28th. Then this one, they collected it in April 29th. So when I did my back, so this is what is flowing. Then this is what is flowing from it. This is for May. So all the bank charges, let me move to May now. So I was able to come in this transaction details. Yeah. So I was able to see here. So you know that analysis thing I did. The thing was not like this. So this is not the way the thing was. So I was the one that analyzed it by myself based on what we've done. So if you see a bank statement, you should be able to classify all the lodgements, classify all the, what's the word now, the withdrawals and all the inflow. So that's what I did to get here. There were some things that I didn't understand. I had to ask that, okay, what did they spend money on? So if you can see this, my diffuser, I showed you in the asset register. So they are what 156. So we need to depreciate it. They bought AC, they bought duvet, they bought fridge, washer, they bought furniture, home decor, ACs. So this is now I classify them as my assets, right? Then now if you see here, we have bank charges. So what I did there was what I brought there, like my analysis. So they gave me, this is their bank statement from year to year like this. This is their bank statement. So and if you can see the balance from April, if you see this 5 point something, that's what they brought here. This one here, that's what they brought here. So if I'm sharing this file with everybody, I'll have to clear all this information because as accountants, we can't share confidential information with people, but I can, what's the word now? I can delete some things and just leave some things so that people will have an idea of where the thing is flowing from. I don't know if you are following me from so far, if I'm not too fast. I hope I'm not too fast actually. I just want to show the flow from bank statement to financial statements. I hope I'm not too fast. Can I continue?
Yes, you can.
Okay, so after I did that analysis, right, then I spooled my bank charges, painting, equity. So now they now had another equity, right, of 20 M. I can't call figures because of security. So this equity now was at inflow. And if you notice, they were not getting.
Hello.
Yeah, I can hear you.
Yeah, I just want to ask, the last account you were doing, are we through with that?
Are you going to get it?
As in, I mean, are we through with the...
Yes, I just wanted to show you how to do the analysis that led to this place. So this one, because I can't share the details, that one I was able to tweak some things. So this is like a bank statement from year to year. This one I painted in yellow. It was what I pulled out from the bank. Do you get?
Okay.
So now this is now the analysis I did. I wanted to show you how I got this analysis, if you understand me. Yeah, so now I'm now doing the headers, assets, bank charges, building, cleaning, electricity, grocery. So if there are some things you don't understand, please, you can always ask the person that did this. So the way I got this thing was that the accountant didn't know, or will I say she didn't know. So we just prepared the accounts together, basically, sharp. Then there was in and out, like this one too. Let me see. Okay. So this, I was able to just put them under separate headings. So I want to show you how that analysis we are doing flows into each financial statement. So I was able to do this. We had the closing balance and everything. So if you see this in and out, the contra entry Mr. Yomi mentioned, so money was going in, money was flowing out. So this was, I think it was, this bank errors that happened, like money went out, then they sent it back. Then some of it, I think this one, he borrowed the money, then he returned it back. So they were doing intercompany loan, they'll send the money out, then they'll bring it back. So at the end of the day, the difference was just like bank charges. So I put this one back to bank charges, the difference in the account. So now to show you how I came here. So we have the expense side. You know that any outflows that happen in your bank are not majorly expenses. Some are capital in nature. Those ones will go to fixed assets. Some are current, like current assets. So if you can see these bank charges now, this is where it's coming from. Control C. So it's coming from here. I don't know if you got that. Then if I come here, I'm linking this to here. So I bring in my bank charges here. So I'm linking it. Then I come here again, cleaning expenses. I come here. I bring it here. That's cleaning expenses. I come here. So this bank expense summary helps you to like summarize all the expense into one header.
So at the time we are coming, we registered left and we did not need to.
Apologies for that. I muted already. Thank you. I'm sorry. So now, where did I stop? This one is for me. Yes, I can use this one for me. Then, okay. Because I would like to give us this so that we can work on it on our own. Then we just see where it's pulling into. So now, if you see, we separated. So this bank expense summary now separates the expense from assets. So if you come here to this May bank statement, you see that there are a lot of things that have what's the word now? There are a lot of things that are capital in nature. So any capital thing is going to statement of financial position. Then anything that has to do with expense is going to statement of profit or loss. So because they didn't have any revenue, so in the first, they started operations in May, but they opened their bank accounts in April. So these are all the expenses that went out. They paid salaries because they had to incur costs. They paid some fees. They did repairs. They paid for rent. They paid for groceries. So they feed their staff. So this was the grocery, the money they paid for feeding for the month of May. Then equity, the extra money that came in. So these ones are investment fund, investors funding. This money is not theirs. The other first 5M was their own money. Then we have electricity, we have cleaning, we have building. Then we'll spool in anything expense is coming here. So we have our bank charges, cleaning. So if let's say we had insurance here in May, maybe we paid for insurance. We'll bring this insurance here. Where's the bank expense? So you just bring it here. Let's say this is my insurance. Come here, May. Then let's say this one is my insurance. I'll just come here and put it in where the total is and put insurance. So all these things is just understanding your linking. So it's going from your bank statements to your bank expense. So this one too feeds your OPEX. So now we have another side where is the OPEX. So this one now, if you see in, this should be for me, not much, but this should be for me. I'll edit this data. So if you see now, this thing is pulling from this bank expense summary. So this one will help us feed into our statement of profit or loss, right? So this one now is bank charges. So I can show you where it's coming from. Control this. So you can see that this is our bank charges. It's coming from here. So this one is just, this page is just like a summary, so that we are separating what is not asset from what is expenses. Then we come here to our OPEX. So if you see, everything here must tally with all our expense here. So these ones are other balance sheet items. Let's see what is there. So that's rent. Reason why it's other balance sheet item, let me take it to where my rent is. So you know rent is prepaid, and they paid this rent for 12 months. And the rent started in May, right? So you now come here. This is our prepayment schedule. So these are other balance sheet items. So if you can see, we have amount payable to director. So you really need to understand your debit and credit. Like now, this amount payable to director is a liability on the business. So the business wants to separate is, I know there are a lot of sheets for us to understand, but I'll take everything one by one. So the man wants to separate the business from the company from himself. So any money he gives to the business, it might be payable. So if it's not in the paid up capital that him and his partner join together, he's not interested. Any other money apart from the paid up capital, he will collect it back once the business start making money. So if you see, we have some current liability here, we have salary payables, we have payee payables. So it's just like bringing everything that is on a normal accounting software. How a normal accounting software we are bringing it to Excel, right? Then now, in May, we had prepayment of rent. We paid for 12 months. So now it's supposed to start from May. Then that's how we got this one that was here. So this figure here is what is in this bank expense, because you need to accumulate it. You cannot just charge the entire rent they paid here. Where is that rent? You cannot just charge it to May, because they are paying it from May 2021 to April 2022. So you need to portion it, do your prepayment schedule and put it there, so that you're not charging. Because imagine if I charge that huge amount here, to just disrupt everything. Then also we have our expenses, everything. So we spooled in from here to OPEX. Then yes, I want to come here, other balance sheet item. Then we have
what's the meaning of OPEX?
Operating expense, sorry, operating expense. So it's just taking this expense side, all the analysis, the summary we took from our bank here. We are coming from bank to bank expense, then we are coming to OPEX. The reason is for us to have a flow so that we can easily trace all these transactions. You know, they don't have like the way in normal software we have journal code, how you can trace some journals. This one is Excel. If you miss any linking like this, it can scatter your figure. So here now, these are my notes to my accounts. So yes, where's my chart of accounts? Hey, okay, this is my chart of accounts. So if you can see now, this chart of accounts is otherwise called the trial balance. So everything that has happened, we are bringing it to our, what's it called now? We are bringing it to the chart of accounts. So if you see now this asset, I can trace it, control this. So you see that when we were doing a refurbishment, so they did refurbishment to the house, like to they rented an apartment and they did refurbishment, because we cannot charge this entire money to a month. That refurbishment will last for a long time, so we need to depreciate it. It's just money they spent in doing like barricades in the building, then some other 1 or 2 things that they did, so we put it under building. Then if you see all the other things they bought, furniture and fittings, this one too, the total will go to this place. So if we check our chart of accounts, you see that this total too tallies with what is here. So it tallies with this. This is our total assets for the year. So everything we are spooling into it. So here now, I'll come back to my depreciation for the month. I'm coming here, control. So this is the total depreciation. All these things have formulas. So if you see, they have formulas. All these things, they have formulas. So normally, for you to understand this your asset schedule now, this is how much we acquire it. Everything. If you understand depreciation very well, this will not give you issue. But for people that don't understand depreciation, let me explain. So the assets will last for 4 years, right? Then the acquisition cost is this. That means it has 4 times 12. It will last for 48 months. So depreciation is done month on month. So this is the amount that we should depreciate per month. So this is P5. This is what is here. Depreciation for May. Then let's say that, okay, we are in months. Let me use that September for an example. I want to move to September and go to the asset register. So if you see now, yes, very good. So you see that we've been accumulating from May, June, July, August, September. It's because we're just starting and we just depreciate that thing for, where's my name? So this is when they started business. So once you've landed on the right foot, you'll be able to follow through with anything they are doing. So this one now is my useful life, my book value. So to get this is you divide this by 48. So basically that's what we did to get our monthly depreciation. So if I do this, that's this divided by 48 should give me this. So you see that it gives me this. So per month in the next 4 years we'll be depreciating 54,531 in their books, like I showed earlier. Then the same thing too applies to this. So now I'm going back to my chart of accounts. So if you can see, we have different headers. So you know that your asset is on the debit side when you are linking. So all these things are linked. So it's just like doing manual labor basically with Excel. That's why most companies prefer to use software. But when you have a company that is not open to software yet, you can use Excel to prepare their reports for them. Then you come here, see building accumulated depreciation, this, that. Then if you see the month, as at when they started in May, they were using only one bank. Okay. They were using only one bank. Okay. Yeah. Sorry. They were using only one bank one bank account. And if you see, we can trace it to here. Control. So this one to bring it here. These are other balance sheet items for people that don't know what other BS means. So anything that will enter into our other balance sheet items are what we are putting here. So you see things like receivables, you see things like payables, you see things like rent. So if they have like prepaid insurance, maybe they paid insurance, they paid insurance for like 6 months ahead. You put it here too, then you do the prepayment schedule. Then if they have something like prepaid, maybe what can we prepay again? Maybe they prepaid for uniforms, like they bought uniforms for the entire year for everybody, then you can add it to it basically. So this thing is, when you're preparing things with Excel, you may not totally follow the entire document. You know, you need to accrue for some things. So it will be as if you are doing cash basis with this kind of accounting. Except if you understand that, okay, some things need to be accrued for, then I'll now come here and do accruals for it, like these current liabilities. Even here too, these liabilities should be more than this, because we can have more payables than this. We can even have trade payables too as well. But because of the nature of this company, that's why we didn't have trade payables. They are not dealing with goods. That's why they don't have trade payables. Then if I come to my chart of accounts, then you see that this is the balance in my bank. So if I come here to my bank, you see that this is my closing balance here. That's what I carried here. This is my closing balance. That's what I took to my chart of accounts here. Then if you see, we have prepayments. So all these things, at the end of the day, your account should balance basically. Like once you've entered it the right way, once you've put your prepayment, like you just make sure that everything here is there. So what we'll be doing in the next class is that we'll make sure that, okay, the linking, I'll clear this sheet entirely, then we'll start it from scratch. I just want to put us through on how to do it. Then I also give us assignment for we that can I'll share this sheet with everybody after I've cleared some confidential information away from it. Then what else? Then we have repairs and maintenance, rent. So this is the rent for the months that we've already shared, that we've done the payment schedule for. Then we have fees, we have general and all. So it is from this chart of accounts that you spool into your SOPL. Sorry, you spool into your notes. So the thing is a bit long. Let me shift this here. So it starts from bank statements, then it goes to asset register or bank expense summary, then it moves to OPEX for the ones that are relating to operating expense. We move to other BS items. We move to chart of account. Then from chart of accounts, we move to, because it's from your chart of accounts. So this notes 1 to 5 is for items in SOPL. Yeah. Notes 1 to 5 is for items. So if you see, they don't have revenue because they've not started operating. So if they had revenue, we would have brought it from, where's my revenue? So I have brought it from here, depending on what they'll do. So also, this is a summary for the revenue. It is not, what's the word? You need to have another sheet. You know the way this OPEX has like a breakdown. You need to have another sheet for all your revenue. Then what's here? Okay, so we were in notes 1 to 5. So if you see income from sale, there's nothing. We don't have direct cost yet because we've not started trading. But the next one will work on when there's trading, like when there's activities going on. Then you see we have our bank charges, we have cleaning, we have this. So if you see this figure tallies with what is here in this OPEX here, it tallies with this. So my notes 1 to 5, then depreciation, you bring this here. Basically, if you have a good grasp of preparing financial reports, this should not be hard for you. Then this too shows us our balance sheet items, that's statement of financial position, right? Then it's like a summary. So for now, they are still using only one bank. So for people asking that we have 15 banks, let me insert. So that means you have to have like bank 1, 2, 3, 4, 5 and accumulate the figure. So this is the closing balance that you are bringing into the books as at 30th of May. I don't know if there's anybody in. No, we'll soon ask our questions. So today we're just doing like a summary of everything. Then we have account receivable. We have people that they are owing us, our customers that are owing us money. Then inventory. We also have prepayment. Then this is our property, plant and equipment. So if your chart of account is not balanced, don't go and post anything inside notes. Like, don't come here at all, because it's from this chart of account you are feeding into this place. So if you notice, most of them are linked. So if you see, they are linked from our chart of account. So if this your debit, oh my god, Ctrl Z. Do that. Ctrl Z. Okay. Yes. So if this debit minus credit does not give you 1 or 0, something very negligent, please don't start posting. Just go look for where your problem is. So the next class, I would like to walk us through using like 2 different bank statements, then spooling it into this. So I would work on that, but I've also done the analysis, or I would have worked on the analysis, because actually there were 2 bank accounts we were supposed to work on. Where's the second one? So we're supposed to work on, not this one. Yes, this one has over 300 transactions. So I know that it will take us like 2 hours to do it. So I'll go and work on this one, like do the analysis and everything, then use it to prepare a standard account in our next class. So this class is just like to give us an overview of what it is. So we'll be using this account to prepare this bank statement that has over 300 transactions to prepare a monthly financial statement. Then also, let me just quickly wrap up with this before we take our questions. Where is this? Okay, yes, I was talking about the chart of account. That if your debit is not negligible, don't post it to don't link it. So if you can see now, we have we have a loss of 4 million after we use our personnel costs. Let me even see how we brought our personnel costs from our bank. So normally we're supposed to have something like salary payable, right? This is it. SOFP, salary payable. Where's my other BS? So we're supposed to have something like salary payable for those people that do payroll. If we have our net plus pension, like the gross we shall be here, like balance gross forward. So we need to accrue for all these things before we just post directly, because as at May, they didn't have a company structure for their salary. That's why we just posted figures from the bank, which is wrong. That's why we just posted the figures from the bank to do it. But normally, you're supposed to accrue for your salary, do your pension, do your net tax. So this is just like give us overview of how everything is. Then if you see, we have our general and admin expenses. So if you see where this is linked from, it's linked from our notes. So the total here, that's what is here. Then this depreciation too is linked from our notes. Control this. Then this is it. So if you come to our SOCF, I hope my SOCF ahead. So let me go to SOFP before I go to SOCF. So if you see, this is our cash, this is our other current assets, that rent that we were owing that time. Then this is our property, plant, and equipment. So if I come here, control this. So this is the summary of our asset register instead of bringing everything to our notes. So for people too that were asking of notes to the account, this is it. Then we have our share capital, we have our profit or loss brought forward and all like that. So these things should help you to be able to prepare an account. But in our next class, we'll be preparing an account. So I was saying now the statement of cash flow. The statement of cash flow, we are starting from, we are using indirect method. So these things, they are already formularized. So you are not distorting anything. If you understand indirect method for SOCF, it won't give you an issue, basically. So